Hey everyone, John Henry here, and today in the market psychology video we can see very interesting movement on this inventory day for crude oil. Now, very obvious, we had a huge gap higher, right? Massive gap to start off the day, especially considering yesterday ended as pretty much just kind of a range, right? We couldn't really they couldn't get out of their own way at the end of the day yesterday, and then we gap all the way up here. So initially, we might be thinking, all right, breakout move, right? We have a huge move up. Let's see if the buyers want to follow this up. And they end with that candle right there. That's not exactly convincing to the buyers. Now, the next candle they follow up with a nice strong bull move as well. So we do know that the buyers may have some interest. But notice what didn't happen. The buyers that were looking to buy above that never got triggered in. And then it turns back down into a very weak bear candle. So now at this point in time, everybody on the planet is thinking range. We need to be looking this at a range, and we need to be buying low, and we need to be selling high and stay out of the middle as much as possible. Now, it is inventory day. So with inventory day looming, it is always good to be careful going into that 10:30 time frame because that can really whip price around here. But when they come back down to those lows, they get an exact to the tick double bottom in a super weak bear candle. Nobody is interested in selling underneath that. Everybody in the world knows that this is a range now, and we need to be buying above it to get that move going up. So that's a nice little buy right there. But then what happens next is the interesting part, because this candle right there shows up completely out of the norm of what we've seen all morning. Huge bull breakout move after a big gap up like this. And we have a range formation that we know that sellers are selling above those highs. It's a range. They're assuming that it's going to fail. So they'll sell some right there, and they'll sell some there, and they'll sell some there, etc. And we know that sellers are heavily scaled into this. And that is not the type of candle that they want to see. They want to see a candle that looks like this, not like this big bad boy right there. So that tells us a couple things. The buyers are looking for the breakout, and they want to drive this market higher. This candle by itself, in the context of everything, is okay to buy above, but it's a little bit risky because we know that, well, we need a little bit of extra proof. It's a range day after all. This might just be a big move and then a failure like we saw right here. Huge move down, immediately fails right back up again. So we need to give it a little bit more time, and they consecutively close it outside again. Now the sellers know that they are screwed, right? The sellers know, wait a minute, that shouldn't have happened. This should have dunked all the way back down, and it didn't. And they begin exiting, and that allows the buyers to jump in for a quick little move right back up to the highs. After we get that move up to the highs, we hit a big chunk of resistance right there. Now, we don't ever want to be the first one to the party. It is a range. We're looking to sell high, but we need a little bit of proof, right? Just like we were looking for right here. Are the buyers actually taking it as a breakout? Well, I'm not going to be the first one to jump on board. Show me a little bit, right? Same thing goes for right here. We're at the highs. It's an okay bear candle. It might as well it's a doji pretty much. I don't want to be the first one in line to that party, especially not after a big breakout move like that. Buyers followed up with a small little inside bull bar, and a lot of buyers will take that just based on the fact that the risk reward is so good. In this case, I would consider that counter trend because it's still a range day. That hasn't changed, right? The range doesn't just get negated because there's a small little bull candle there. Buyers get triggered in and immediately slammed out, and that is a beautiful follow-up, proving that we're at the range. This is probably the range highs. We're probably going to fade back into the lows, and we should be good to go. Right? So it's a beautiful sell all the way back down. You can tell every time the buyers kept trying and trying and trying, and they just got worse and worse and worse. And then the news comes out and slams lower right back below the lows. Now, for those folks who weren't paying attention, this is a range day, so there will be buyers underneath all of these lows trying to scale this in, right? But what's the problem? Well, they're doing it during news, and news is always a terrible time to be trading. You always want to let the news kind of shake itself out a little bit. And we can see that all of the buyers that were trying to buy this, most likely when it popped back up like this, took small profit, maybe got out of break even, realizing, oh, I forgot about the news. I need to get out of this. So they get out, and that causes a nice drive lower. And we see the exact same thing that we saw up here, down here. Huge breakout momentum. But this is where the extra proof comes in, right? They don't get it. Look at the difference from these two to these two, right? The bulls break out, they get the continuation. This one, the bears break out, they don't get the continuation. So we need more information before we go jumping into this move, because this could easily be a fade right back into the range up. The buyers try, very weak. The buyers try again, very weak. The buyers try one more time, and the reason I like this area as a short is because if we look above here, the buyers are triggered in, they get triggered into the move and immediately slammed back down, and we know that the buyers are now stuck. They're trying to buy the lows of the range. They saw no follow through from the bears. We need more information than that to be a buyer here, and they get dunked, right? That is a beautiful opportunity to drive that market lower, waiting for the buyers to show up to drive this market back into the range. Remember, this is still a range type day, so we need to be looking to buy low, but that is not the one that you want to be doing it on, especially with all of that just terrible follow through. Trap on the highs, dunks the buyers out, beautiful sell right back down into an area of support. So that's today's movement. Very, very interesting movement. And as long as you played it safe, waited for that extra proof, along with the technical analysis and market psychology, man, you had a really good 1-2 punch today. So hopefully you found it interesting. Hopefully you learned something, and we will see you next time.